Hey guys, welcome and thank you so much for clicking on my channel. This is Matador Trades, and I hope you are out there drinking the coffee, not the Kool-Aid. So, what I am excited to bring to you guys today, this is for beginners. It's a basic presentation here where I'm explaining market trends and understanding basics for beginners. Now, why I'm excited about this is because I believe that this is where it all starts. I mean, aside from the mental fortitude and disciplines and sort of the mental I guess emotional control, managing your emotional responses to markets. I believe that this is one of the most important things along with risk management. So without too much discussion here, let's get right into the slides. And if this sort of thing is for you, I hope it adds some value to your trading, and please enjoy. So on the first slide here, we discuss what price are you willing to pay? From this moment forward, I would like you to make a promise to yourself to embrace adversity and leave behind the idea of making fast, easy money. Your absolute goal is to learn how to stay in this game. And that means risk management, by the way, guys. Okay? And also emotional control, controlling your emotional responses. You can only do this with fortitude, adaptability, patience, and emotional control, just like I mentioned there a moment ago. Have a solid game plan and stick to it. So that's where discipline comes in handy, of course. And you must pick your battles very, very carefully. I want you to keep in mind always that when you're trading, it's a zero-sum game, okay? There's always a winner, always a loser. And for you individually, the best approach generally is to have almost a cold discipline and manage your emotions in this market, because there's always someone out there with more money than you have, more knowledge than you have, more experience than you have. And then you also have to work with your mind, which is trying to undo you at every turn. You know what I mean? So that's why we've got to have a solid game plan and pick our battles very, very carefully. Okay, moving into the next slide. These are my trading rules and some examples. I'll touch on these very, very briefly and just kind of add a little side note to a few of these here to hopefully help you develop your own. You need to develop your own trading rules because we trade our own personalities. We invest our own personality. This is the reason why you can't just copy and paste someone else's, their trading signals or their approach to markets, because you have a different risk tolerance. You maybe have more capital, less capital. I mean, they're very, very different variables. You have different personality, as I said, so these things cannot just be a cut and paste solution. I mean, we'd all be fucking rich if that were the case, right? We just copy the best traders in the world, and there you go, or investors, right? So anyway, so first off, have a trade with a plan and stick to it. All right, number one, we talked about that in discipline. Trade with the trend. The trend is your friend. Remember, the trend is always your friend, and that's why it's important for us to identify, well, what is the trend, so we know who is our friend. Okay. Now, use stop loss orders whenever practical. That's going to be a part of risk management. When in doubt, get out. Remember, a cash position is a position. I would say this falls under risk management as well, okay? But don't think that you're some genius that, the market's moving 20, 30%, and you're like, hey, I'm in a cash position for when it drops, it is shown you that it is a bull market. So why would you be sitting in cash? This is when you should be pressing your position, but there are a lot of people out there who think that they can outsmart the market and, to the up and the downside. Remember, risk cuts both ways, but when you're in doubt, it's okay to be in cash. It's absolutely fine, because it's better to be in cash and wish that you were in a trade than to be in a trade and wish you were in cash, right? So keep that in mind. Don't live and die on that hill, but just keep it in mind, okay? Be patient and never overtrade. The market is always offering opportunities. Also keep that in mind. Let your profits run, cut your losses. The best traders in the world, as I said, have a cold-like discipline to cut their losers. We don't water our weeds and cut our flowers, right? So that would be the equivalent of that. And there's one of the best traders out there. His name is Tom Hugard. He's written a fabulous book called like something like The Best Loser Wins or something like that, or something. I can't remember the name of it, but he talks about being not fearful when everyone else is optimistic, but he's like, be something to that nature, something to that vein, be fearful when other, I mean, Warren Buffett says the same crap. It's just different words, right? So anyway, so buy weakness and sell strength. Be just as willing to sell as you are to buy. Remember, risk cuts both ways. Be an investor in early stages of the bull market. Be a speculator in the latter stages of the bull market and in bear markets. This is why we are going over this and better understanding market trends on a basic level. Never average a loss. Don't add to a losing position. Press your winning trades. I just mentioned that a moment ago. Trade only liquid markets. Of course, we need to get in and out of our trades, and liquidity is the lifeblood of all markets. Tips are for waiters. Trade with the trend, not your friend. This is important here as well, guys. Friends of mine daily, tell me, buy this, buy that, buy Palantir, buy SoFi, buy this. It's not my jam, guys. That's not my jam. So I don't buy it, Yeah, Palantir chart looks great. It might look good, okay? And that's all great. But I haven't taken the time to study Palantir like they have. So I will not have strong conviction. If the price retraces, will I add to my position? Will I cut my, what would I do? I don't know because I haven't taken the time to study. It's not my jam. Okay. So I stay away from things that people give me the tip for. Like I said, tips are for waiters. Trade with the trend, not your friend. The trend is our friend, not, not people giving us tips. Anyway, always analyze your mistakes. This is important. Always keep your own records of trades. These two go hand in hand. Basically, I keep a journal of my trades. The market is forever changing. So based on certain conditions in the market, I'm writing down my emotional response because those responses are going to be different given different market conditions. So I write down my sizing. I write down, obviously, the asset that I'm in, and it allows me an opportunity to learn from myself. What is it that am I impatient? Am I FOMOing him? Am I, selling out of fear? All these kind of things are going to help with a journal. This is very, very important, either written or digital, whatever you prefer. I write my shit down, and that's what I like. So anyway, know and follow your rules. This goes along with discipline. If you are not disciplined, you will never make money in this market or anything else in life. It's very, very important to be disciplined and stick to it. And that's why many people lose in this market because they have an emotional response. They're not sticking to their proven disciplined approach. Okay, and I say proven, and that means that it's going to take you time to find out what works for you. All right, let's move to the next slide. Okay, introduction to market trends. What are market highs? Why do prices move up and down? And the importance of recognizing trends in trading and investing. And at the end of this slide, I have a bonus for you guys. This is going to be discussed at the end of the slide along with a bonus I have for you guys. So hopefully you stick around with me. Hopefully you take away some value in what I'm about to share with you. And I'm hoping, and my intention greatly is that it adds some not only value to your life, but also help with your trading and, what can I say? Bring some enlightenment, I guess, if you will. So what prompted me to do this is because I've been mentored at a young age. My mentor is a VC guy, hedge fund guy, Goldman Sachs guy, the whole deal. But he never taught me how to trade. Never taught me how to trade. What he taught me was a psychological approach to the markets. This is something that he drilled in me and instilled in me for probably a good part of 15 years of my life. And so I'm hoping to share some of those nuggets with you guys, and hopefully you'll take something away that is of value. So before I get into the next slide, I want to kind of touch on this. What are market highs and lows, and why do prices move up or down? Now, market highs and lows are formed when determined, well, they're more or less determined by willing participants who have the conviction that the price of an asset is either over or undervalued. All right. And they buy. They express their willingness and conviction to participate by taking a position of either buying or selling an asset, just like I said. So these ups and downs, this pushes, I'll say, the prices of an asset either up or down. When the majority of participants have decided to stop buying or selling, the market high or market low will be created. And it's my belief, guys, that in a free market society, trading and investing is absolutely the best and ultimate expression of democracy. This is why I love it so much. This is why I want to share this with you. And to me, it is a language. It's a language of expression. And the markets, I should say the charts are expressing that in a visual context as well. It is emotional responses, people's emotional responses to these assets. So anyway, I hope that makes sense to you, and I hope that adds some value. Let's move along to the next slide here. Okay, so type of market trends. You've got uptrend, bullish market patterns, definition of a series of higher highs and higher lows. So you've got HH and HL. You've got downtrends, which are bearish market patterns. And that is the definition of that is a series of lower highs and lower lows. So you have higher highs and you have higher lows in bull market patterns. And in bearish, you have lower highs and lower lows. And we'll get into that more soon. And sideways or range-bound patterns, the characteristics of price moving between fixed highs and lows, and consolidation and uncertainty without breaking a pattern. Now, I will touch on this a little bit here on this range bound and who benefits from that and so forth. But I will say this. Most of the time, 80% of the time, the market is range bound. It is moving in a sideways pattern, all right? Uptrends and downtrends come along another 10% of the time each, give or take, right? Uptrends 10, downtrends 10, roughly, right? But overall, the market is range bound while moving up, okay? All right, let's get to the next slide. We'll get into the charts, and I hope it becomes more clear to you as we kind of go along. This is my favorite part of these slides. Hopefully, you'll take something away from it. Whoops, my mistake. Go one more slide. What type of market participants benefit in market conditions? All right, so we've got, in an uptrend, you've got a bullish pattern conditions who benefit. Breakout traders, momentum traders, trend followers, call option buyers. In a downtrend, you have bearish patterns that are created, with our lower highs and lower lows, and those are short sellers benefiting from that, put option buyers, and contrarian investors. So I think that makes sense. All right, now we're into the charts. Okay, all right, I put a little cheat sheet over here for who benefits from this type of price action. And I put a little cheat sheet here for your higher highs, higher lows, lower highs, and lower lows. All right, so if you look to the left over here of this chart, what you see here is before the breakout here, you had the market kind of chopping about right here, okay? And once the participants decided that there was value in the price that they saw here, they decided to buy more. And obviously more participants bought, which created a break in structure. Boom. You see that move right up right there. That's why I have that arrow. And then what we want to wait for as traders is we want to wait for continuation and follow through. We don't want to get trapped up here, okay? Because oftentimes there are bull traps. We won't get into that in this video, but there are bull traps, and how to determine those we'll get into in a later part. And then it takes a shit, right? Falls out of bed, and you're trapped up here. So we do want to see a break in structure, obviously, right here, right? And then we want to see continuation, which we saw here. These are on a 15-minute time frame. Sorry, 15-minute time frame. Obviously, I'm charting NVIDIA here. You can see in the top left. And follow through. All right. So that's when we've broken this range, putting in a high. Okay. Now, this price action didn't exist yet. It didn't exist yet, right? So, a lot of times people say, oh, this is hindsight trading, but what we want to do is we want to recognize these highs. Do you want to FOMO in right now at this point? No, probably not, right? You'd be buying the high, which oftentimes people do, because this price retraced right here, as you can see, right? And if you look at these wicks highs and the wicks lows, there was some indecision here, right, as to what may or may not happen before we started to retrace, form a little bit of a local bottom right here, okay, before we put in another higher high. It kind of marched on up and we put in a higher high. Now, if you look over here at the cheat, right, a higher high is the current high is higher than the previous high. The current high is higher than the previous high. Now, what's next? Remember, this price action right here doesn't exist yet, okay? So we're charting this. We're looking at this. Now, what's the next move? What happens next? The price obviously goes down, okay? It goes down, and then it closes right in this area, right in here. I kind of just generally put my little markers here so you can see it, okay? Right in here, we put in a higher low because it is higher, but it is also lower than the previous high. So that's why we have a higher low formed here. Then after that, we see here, price came down, and we are much lower at this point right here than this, right? So I won't get into too many details on stop losses and things like that, but I will get into that in a later video. But if you manage your risk well, you probably would have been stopped out right in this area here when price came down, and you would have been in a cash position, maybe 50% cash or what have you, maybe 25, 75, whatever you decided was good risk management for yourself. You would come down, and perhaps once you started to see a low formed here, you're going to wait for confirmation. Price came up. We didn't get that confirmation yet, but we did here because it broke structure. This is perhaps where you might have got into the trade, right around this area here. Once we started to close right above this line of what was resistance as we hit here. We fell off the bed here, we hit it, and we couldn't quite close above, and then we moved up. And then over here, we're forming a lower high because it's lower than the previous higher low. So we're good there, all right? So if you look over here again at the cheat sheet for the LH, you've got the current high is lower than the previous high. You got that, okay? So it's really plain to see. Now, we started to move down a little bit, putting in lower lows. Boom, boom. It kind of chopped about here before we got that breakout again. Very similar to over on our left here before we broke structure. And then we had a break of structure. As you can see here, we had continuation. And these, again, are 15-minute candles. I use gray, not green, because the red and the green mess with my mental perpetuity, and I want to stay away from that stuff. So I try to use every advantage that I can to help me not play into the game of what's going on in the market with emotional responses and so forth. So that may help you too if you want to use TradingView and change your colors or whatever. So that's what I do. So we had that continuation, like I said, and then we put in another higher high. We put in a high, so this is clearly a bullish pattern, as you guys can see. And we're above all moving averages. We're above the 50-day moving average, the 100-day moving average, and the 200-day moving average is in an upward posture, which looks really good to me. So as you can see here, anytime we stayed above this, right, we tested down here, we kind of went back up, tested here, went back up. It's looking really good, putting in higher highs, and lower highs, higher highs, lower highs coming on up. Now, yeah, we could put in our higher lows within here and so forth, but it's really not necessary. Generally speaking, you can kind of see what's going on in the market, and you see that this is a bullish pattern, okay? And once again, these are the participants who benefit. Breakout traders, why? Because they caught the breakout. They waited for continuation, and they continue. Momentum traders, they like this momentum. Trend followers, the trend is upward. The trend is your friend until it's not. And call option buyers because they are long this asset. So there you have it. Anyway, hope you can see that, and I hope that's clear. And in case it's not, boom, I put it on a line chart for you. So this is something that I do sometimes so that you can see more clearly what's going on and have more clarity in this crazy world we live in, right? In these crazy markets that we trade in. So hopefully that helps you. Again, I marked it out here, the higher highs, higher lows, lower highs, and lower lows. You can see that very clearly. We come down, bang, we put in a low, lower high, we come down, low, low, breakout, continuation, confirmation, higher high. It's above all our other highs. That's looking real damn good to me. But am I getting in here? No. I'm going to wait a little bit because we might retrace. We get in here at the higher low before we move out again. Now, that's easy to say, right? But if you're charting this and you're looking at this with, shall I say, indiscretion, right? Indiscretion, then you will, I think you'll pick up on these signals, right? I mean, you could be wrong, but this is where risk management comes in. So, all right, let's get to the next chart. All right, so, okay, in this one, it's clear to see that we're putting in lower highs and lower lows. LH, LL. We've got lows here. There's just not much strength in this. You can see this, a low, a low, a lower low, a lower low, a lower low. It kind of like arches over. And it's very clear. We did have that breakout. We had not quite continuation here. We closed actually down here. The next candlestick, this is a daily with Pepe on a daily time frame. And so we close up here putting in a higher high, but then we shit the bed and came down and then closed down here. So we kind of just, we're not quite getting above these levels like we would like to see until here. We did put in a higher high, which was really great. And then we chopped about and then shit the bed. So if you were managing risk, you put in a stop loss right around this area, right here. You're not always going to catch the highs. You're not always going to catch the lows. Anybody who says that they do is full of shit, all right? But there's always opportunity in the market, guys. So you can always make money as long as you have you get rid of these, the notion, for example, that, like so many people, I talk to them and they're using hopes and wishes and yeah, I hope and I think, and what we're dealing with is probabilities, all right? That is what we're dealing with. What is the probability, of a continuation here to the upside? When we probably use our volume indicators, we're managing risk, all these things, profits are going to take care of themselves as long as you manage your risk and keep a clear head. And like I said earlier, have a cold discipline to cut your losses and press your winners, all right? And these people, like I said, people that I know, guys I talk to and stuff that say, oh, that's not a strategy. Number one, that's not a strategy. Number two, I don't talk to people like that. I stay really far away from them, or I call them out on their bullshit. Like a friend of mine said today, oh, I wouldn't be surprised if, was it Palantir closed positive today? Don't be surprised. That's what he told me. And my reply to him was that I'm nothing, okay? I am going to be nothing, all right, today. I am not surprised, nor am I happy or anything else, because it's not about being surprised, because that would imply that I have a bias. You know what I mean? So anyway, just keep that in mind, okay? So let's move on to the next slide. You can clearly see that this is a lower high and a lower low, okay? Here is our line chart once again, and it's very, very clear. Boom, this just shit the bed. Wham, right on over, okay? So again, if you follow the cheat sheet, you've got lower highs and lower lows. We had that breakout, we put in a high. Then we came down, we had a lower high, higher high, then we came down. Lower low, all right? Lower high, lower low, lower high. This thing is just, it's bleeding, baby. It's just bleeding, all right? So let's get into the next chart. I'm sure you can clearly see that. And we're going to talk about range-bound conditions. Who benefit in range-bound conditions? Institutional traders, market makers, range traders, high-frequency traders, mean reversion traders, and options traders. Now, I love this. I love this here because, as I said, in range-bound conditions, that's where you're going to make most of your money. Paul Tudor Jones made most of his money in range-bound conditions, trading the ranges, okay? And institutional traders, the big money market makers, they make their money here. They don't care if the price is up. They don't care if the price is down. Those are the conditions by which they are playing in, all right? So that's where they find most of their bread and butter. All right, and who benefit? So you got that information. Let's get into the charts. Okay, clearly, you can see that Bitcoin is moving within a range up here, okay? Now, if you go back to my first chart, the one that I showed you there on NVIDIA, I believe it was on a 15-minute time frame, you saw that price action to the left of the chart where it kind of was chopping about. It was ranging until we got that breakout that you saw, the continuation, which helped us know that, hey, there is follow through on this. And then we've got the break of range until we start getting into a ranging pattern again. So as you can see here, once we broke above this resistance, we kept hitting it, come down, hitting it, come down, hitting it. And then we finally broke through it, breaking structure. We came up and then tested it again and went back up. It held support. This yellow line then became support, okay? I'm going to tell you right now, the date on this is February 20th of 2025 that I'm making this video. I just want to make a point to you, okay? Just want to make a point to you that, and I'm not bragging here. I'm not bragging at all. I actually made, this is the second time I'm making this video. The first one, I was coughing too much and other things, but this is the second time I made the video. I made this video yesterday, and now I'm making it today on the 20th of February, 2025. And I pointed out in that video, which I'm going to point out to you again today here, that Bitcoin was functioning in a range here. As you can see, this is Bitcoin on a daily. We've got the range low, we've got the range high. And I told you who benefit from that and what the characteristics of that moving between these highs and lows, all right? So what I do is I put in my line right here of support, which is now support. And we're moving in within this range. To me, when I looked at this pattern, and I stated this yesterday, this looks very bullish to me. And why? Why does it look bullish to me? It looks bullish to me because when you zoom out, okay, we before the breakout right here, we had resistance right here. Look at that resistance. Boom, we came down. We came down, all right? We didn't quite get up to that level of resistance right there. We came down. When we broke out, once we broke out above that resistance, it was game on at that point. That's where you're going to be pressing your winners, pressing your freaking winners, all right? And then once we closed up here above this, it's like game on again, right? So because what happens is the more the price stays, the longer it stays up here, the more support you have for that price, right? So price supports time and time supports price in many, many ways. So what we want to see is consolidation at this higher range in price. That's a bullish signal to me right here if I've ever seen one. And if you look at your highs and then where we broke out, we're at, from here to here, we're above 50% of that. That looks very good to me, guys. To me, that looks very good. So I just wanted to point that out so you can keep an open mind. And again, today is the 20th of February, and what did Bitcoin do? Bitcoin jumped, I believe it was about $2,000, if I'm not mistaken, when I looked at my charts earlier. Very, very bullish to me. And this is what institutions are looking at also, not emotional retail traders. So you want to trade with the trend because that's where the money is trading, the institutional traders and the market makers. You want to trade with that trend because they're the ones moving the market, not retail traders. We're riding the wave, guys. We're along for the ride. Okay, so I think you can see that there. And let's see. Yeah, that's all I want to say on that. Okay, let's keep moving on here because I can talk all day. So recognize false breakouts and breakdowns. Indicators used for divergence. Not taught here. We don't get into volume indicators, RSI, stochastics, and that sort of thing. MACD. I don't use MACD. I use volume indicators. I do use divergences. I love the RSI and stochastics and that sort of thing. I also use price action. I mean, there are many things. So what is divergence? When you see your indicators showing you one thing and the price is going the other direction. In a nutshell, that's basically what it is. So you want to look for those in case there's a fake out, bull trap, bear trap, all that, right? Market cuts both directions, right? Risk cuts both directions, up and down. For every person out there who thinks the market's going up, there's a million others too who thinks that it's going down. So just keep that in mind, okay? There's always someone on the other side of that trade thinking opposite. As long as there's liquidity, there's someone on the other side of the trade. Let's move on. Okay, so final conclusion. All right, remember, like I said, I've got something special for you guys at the end of this slide. Final conclusion. Why is it important to know the market conditions, to know the trend, right? Because you'd be pissing into the wind otherwise, right? You do not piss into the wind. And as my mentor used to say, this kind of goes on the back of having these sort of, these hopes and dreams and, wishes and this sort of thing with regards to your emotional responses. He used to always say to me, if your aunt had balls, she would be your uncle. But she's not, right? She's not, clearly. So hopes and wishes and oh, I this and oh, I could have that and oh, why didn't I that? None of that is a trading plan, guys. So anyway, hold on one second. Sorry. Excuse me. Apologies. So don't piss into the wind, okay? Will help. All right. Let's see. And knowing the trend will help you establish goals. It will help you be flexible. It will help you adapt, adjust, and overcome. Okay, it will. You're more so here. Adapting and adjusting goes along with knowing the enemy, and that's the enemy within. Most often, your own mind. All right. So we'll get into that. This bonus that I have at the end of these slides will help give you that. Manage your risk both to the upside and downside, because as we know, risk cut both ways. I've said that I don't know how many freaking times during this video. Survive to fight another day. That is our goal, guys. Your P&L will thank you for it. And most importantly, stay humble. Stay humble in life. That is a major tenet of mine. And stay humble in the markets, because the market will fucking humble you if not. Okay? So just keep that in mind. There's so many people out there, they think they know everything, and nobody knows shit. If they did, all right, they'd be multimillionaires. They wouldn't be making fucking videos all the time and all this other shit. All right, we don't know where things are going. None of us do. But we want to know our rules. We want to adhere to our rules. We want to acquire knowledge. We want to establish goals. All these things, right? And we want to allow the market to give us the feedback. All right. So just remember that, and I think you're going to do fantastic. You're all going to do very, very fantastic. So, all right, in the next one here, this is where I have a gift for you. As I always say, drink the coffee, not the Kool-Aid. At matadortrades.com, you can download this free PDF that I have for you called Exploring the Psychology of Successful Trading by Gideon Sterling. There we are. And this has lots of nuggets that my mentor has taught me over, like I said, about 15 years of my life, give or take. He's still teaching me. I'm still learning. I'm always learning, right? That's very, very important. And hopefully some of these things that I share with you here will help give you, will help tilt the odds in your favor, the probabilities in your favor, and hopefully help add some value in your life and make you a more profitable trader. Ultimately, my goal is to share with others the mistakes that I've made in my life, and I've made all of them, will help you be a better trader, a better investor, and make more money out there in the world and pay it forward to other people. So I hope you found value in this video. Have a wonderful, wonderful day, guys. And thank you for clicking on my video. Like it, subscribe, or whatever. Also, some comments or whatever. If there's something else you'd like me to do a video on, any questions I can answer, I'm happy to answer. I might not get to you right away, but I try to do that as best as possible. This is a little different than the shorts that I normally do. I do shorts on technical analysis. If you want to follow that, it's the Matador Trades on the YouTube channel there, and you know that, whatever. Okay, so all the good stuff is there for you. And thanks again for watching this and staying with me. And I hope this bonus is brings some value to you. Take care and have a good day.